Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with another episode of our weekly Forex Forecast. Now, if you're new to my channel, I'm just gonna assume that you're here to make money, and I urge you to actually sit right there and then watch this video all the way to the end. And be sure to always come back and watch, because you never know, you could always learn something new. So the first pair on my list now is the pound sterling. So for quite some time now, we've been calling the pound sterling to the upside, and however, the market has just been very slow lately. It has actually not even made any move, to be honest, considering the upward trajectory. So what we have here on our hands now is a break below a demand level. Now, however, I urge you guys to be very patient with this, because this is actually at a very critical level, which I'll go ahead to show you right now. So if you look at things from this perspective, now we have series of higher highs and higher lows here. We have a low here. This is a high, this is higher low, some form of equal higher, then a higher low from here, then sorry, a higher high, then a higher low, higher high, higher low, higher high, and then it failed to give us at least an equal low here to even prove that this is a demand level that has turned into maybe a double bottom or something. Instead, it just kept on leaking through the demand level. So what we need to do now is identify where this guy could potentially be going to. However, if you look at things from the weekly time frame, let's see how things look from that perspective. Okay, so as things stand here, this is exactly what this guy looks like, all right, from the weekly time frame. So this is obviously we are in a downward trajectory for like 2 years, and then for some reason we just started to rotate all the way up. Now, following this engulfing pattern here, this is the weekly time frame, and it takes about 5 trading days for this candlestick to be formed. So following this engulfing pattern here, now this is just like the follow through of this engulfing pattern. All right. So now, as things stand here, we have, first of all, we have some form of an inverted head and shoulders pattern. You have the head, shoulder here, and then if you go ahead and mark out the neckline, this is exactly where it brings us to. All right. So now, however, we don't use lines for this stuff, so I'm just gonna go ahead and use my standard demand level. Yeah. So this is exactly what it looks like here. Let me just bring this guy out. So this is what my standard demand level actually looks like. Okay, which is the neckline of this. So this is the head, shoulder neckline here. Then retest for a possible continuation to the upside. All right. So now the following thing now that we'll do next is to go on to the daily time frame here, and then see if there's a way we can actually connect the dots. But let's see from the weekly time frame if there's something we can do. So for me personally, I'm not really a big fan of plotting your trend lines on the weekly time frame, because my weekly time frame is just for my chart patterns. Let me just identify candlestick and chart patterns and see what the overall flow looks like. However, if you would prefer to go ahead and then plot your trend lines from here, this is exactly how it would do it. Sorry. So this is exactly how it would look like. So just come on here and then try and connect the dots from this point. So this is where this trend started from here. Okay. So connecting these two, this is exactly where things stand. So this is more or less the first touch, second touch, and then this could be the deciding factor here on this pair as the pound sterling stands. All right. So now scaling down to the daily time frame. Once again, I rather not draw my trend lines on the weekly. So I would always scale down to the daily time frame or lines on the weekly. I rather come on here and then try and see how I can connect the dots from this point to this point here. So this is exactly how things look. So we have like first touch of the trend line here, touch 1, touch 2, touch 3. And then also we do have what seems to be like an outer trend line here, which is somewhere around here from this point to this point. So this is too far from price action, so we'll just go with the inner trend line at this moment. All right, so this is exactly how things look. So we are at a very critical point here, which happens to be let me see if this is also my Fibonacci level. Okay, yeah, so it is still my Fibs level, demand level, and then also a trend line. So whenever you have these three conferences come together at one point, it is actually very crucial, because as things stand now, this could actually be the deciding point if this guy would actually continue higher, or just keep breaking below. All right, so now that's just that for the person. So what I need to see is very simple. Should this market decide to go higher, so what we need to see is an engulfing pattern, and then also thankfully we have some form of flag pattern here, so we could easily come on here to plot our trend lines like so, something like this. All right, so once we see that engulfing pattern, that 4-hour break above here, then entries will be made, and then stops will always go below structure. Right. So the next pair on my list now will be the euro dollar. So for the euro dollar, it has actually hit a very previous weekly outlook. Okay, so as things stand here now, we have to be very careful with this pair, because anything is possible. Right. anything is possible at this point. Remember, I called out this guy to the upside, so anything is possible. All right. So now we're actually coming to hit this demand level somewhere around here, and then this was where this market reversed from. In recent times, if you look at the past price action here, this was where the market reversed from in recent times. So chances are we will most likely reverse from here. Okay. However, should we actually go ahead and then reverse from here? My target for this euro dollar will be the neckline of this chart pattern here. So this is a double top here. So this is the neckline that got broken, and then not only did we break the neckline, we actually went ahead to create a supply level here. So what we need to be looking at for now is very simple. Just a pullback into this into this neckline of this double top here before we actually get to decide what we are doing. All right. So if you're the type that chooses to buy this pair from this point here, your take profits at least should be at this neckline, because this is where you get to see if the market would further rotate back down or would even continue higher from here. So this is the point that you get to decide that. All right. So on the 4-hour time frame, I don't see anything complex here. It's just very simple. Okay, so we need to see the market rotate all the way back up here. Maybe you can actually look out for a break of trend line somewhere around here before you actually make your entries. However, in the event that we do actually break below here, so this is the contingency plan here. In the event that we actually go ahead and break below this yellow bar here, this yellow bar right here, we have space all the way back down to this blue bar. All right, so as things stand here, it is quite possible. Anything is possible, and if we do break below here, we have about 190 pips to the downside should this guy break below here. All right, so the next pair on my list now would be pound card. Is in a range right now. I called out this pair in my previous weekly episode. If you doubt me, you can always go back and check it again. As things stands, my prime target for this guy remains at this green bar here, which happens to be a weekly high. The next pair now is a USD card. Also has it's at a very strong supply level here. So the market had actually reversed from this point in the past. So probably we could see a reversal from this point here, but I'm not quite confident with this whole setup here, because I'm not really the kind of guy that likes to trade counter trend. And as things are, this is a bullish trend here, so you're most likely you're better off looking for a buying opportunity. So that's why I put this bar right here, because the market came here and then gave us some form of a double bottom here. So we need to see the market do just come back down into this neckline and then give us a decent entry opportunity for us to potentially ride this guy out above. Even if this guy is going to continue higher, because this is a range play here. So once this guy breaks out of this range, we could easily see this guy rally into the tune of this total amount of pips accumulated in this range here. All right. So like I said, should we actually break out of here, we could actually continue higher to this point here. However, in the event that we fail to break out of here and then come in here to break below this point here, this will obviously invalidate this whole play out. Okay, so the next pair now would be the Aussie dollar. So the Aussie dollar also has some form of bearish momentum attached to it. All right, so as things stand here, we're actually broken below the first demand level, and actually now in my subsequent videos, I'll be talking about how to trade demand and supply levels like a pro, like how to actually trade the supply and demand levels properly. All right. So what happened here was the market actually came in once again from a previous weekly outlook. The market actually came in here for a third touch of a trend line. Okay. If you connect this guy here from the weekly time frame, you can see that this was more or less a third touch of the trend line. All right, and then this was also a demand level here. Sorry, a supply level rather. So the market just came in here to test, and you guys saw that when this market peaked above here, it came back down, tested it, tested it again, and it's most likely gonna drop further. All right, so history always repeats itself when you're dealing with the financial markets. So as things stand here, this is another weekly engulfing candlestick here. So we could most potentially continue with this follow through here, and then come into these levels such as these levels around here. Okay, so we could even continue lower to this point here, and then if you actually look closely at the Aussie dollar here, from swing low to swing high here, the market could even be coming into a demand level which is at the 0.618 region. So anything is possible at this point. So I urge you guys to just be careful and then watch closely. However, as far as I'm concerned, the dollar-based pairs are not really enticing at the moment. They don't have anything enticing. So I would urge you guys to actually stay put and then focus on gold, silver, and then the S&P 500, BTC, and then obviously the yen pairs, which I'm going to talk about now. All right. So the next pair on my list now is gold. So for some reason, gold has been bolting through every single supply level, and it's actually headed to our prime target, which is the $3,000 per ounce for gold. I was having a discussion with someone at my workplace one time. I said to him that gold was going to blow through $2,600 per ounce, and he doubted me because he was actually selling this pair as at the time. I think I caught out the pair somewhere around, I think inside of here. I said that this guy was always going to continue higher, and he doubted me. So I'm sure that he's probably sitting on a blown account as we speak. However, so as far as gold is concerned, now what we need to see is, like I said, a decent pullback to this 2,673 region here will be very, very ideal for us to actually go ahead and add to our buying positions on this pair right here. And for some reason, it just came on here and then it has failed to come lower. So I'm actually watching this guy closely. If he then proceed to make a new high like above this particular high here, then I would certainly go ahead and then execute this pair, right? Because this guy is free, is a free rally all the way to $3,000 per ounce as far as gold is concerned. So it's either we see that dip back down here, or we actually break above and then continue higher. Either ways, we're actually coming to $3,000 per ounce as far as gold is concerned. All right. So it's either this guy dips back down to this level, then test it properly, and then give us an entry opportunity to buy cheaper, or actually breaks above here, and then other ways we still keep buying this guy. But my prime target remains $3,000 per ounce, and I'm very, very bullish on this guy until we get to $3,000 per ounce. All right. So the next pair now should be silver. So for those of you guys that missed my silver calls all the way from, I think, August, September ish, you guys, all I can say is sorry. All right. So as things stand here, because we actually called out silver right from the $26 per ounce region, which is, let me just go on the weekly time frame to make this guy look clearer. So which is around this bar right here. I called out this pair from this point right here, and I said that this guy was definitely going to continue higher to $35 per ounce, and that's exactly what we've done here. However, in the process of going from here to here, we've actually come to create a demand level. So I'm actually banking on this guy coming back to test this demand level somewhere around here for silver, yeah, because we have actually broken out of this downtrend here. Okay, so the market should actually come to test this demand level before we actually continue in the upward trajectory as far as this guy is concerned. Per ounce region, which is around here, which would be very, very good for more buys. All right, so as far as I'm concerned here, silver has that potential of even heading higher, because once we clear this bar right here, once we clear this blue bar here, because of how gold is actually bolting through every single supply level, once we clear this bar right here, we have space all the way to $46 per ounce as far as silver is concerned. All right, so what you need to see is actually what you need to wait for is actually wait on the 4-hour time frame for something like this. All right, so it's very, very simple. What we need to see is one more leg down to $31 per ounce for silver, and then we'll actually continue higher from there. All right, so prime target once this guy pulls back is $35 per ounce, and then once we clear that space, we have a space to around $46 per ounce for silver. All right, so yeah, it's good now. So S&P 500 has been making series of higher highs and higher lows, and this guy is always very, very bullish. Do you understand? This guy, if you see this guy in a downtrend, it's just a pullback, believe me. And we caught our S&P right from 4,600 basis points. If it doubts me, go back and watch my previous videos. All right. So but yeah, enough of the blabbing. I just feel myself sometimes. So for S&P 500 here, so this is how things look here. We have actually created some form of inverse head and shoulders pattern here, which is the head, shoulder, neckline broken and retested. So what we're actually waiting for here is to see that one more leg down to this point here to validate this demand level that was actually created somewhere around here. Okay, so what we need to see, by the way, let me just let you guys know where I caught the S&P from here, 4,106 actually. All right. So what we need to see now is a pullback to this neckline here, right? So on the 4-hour time frame, this is how things look on the 4-hour time frame. It's just series of higher highs and higher lows and demand level. That's just it. Trading is not that. It's simple. Let me just put it that way. So what we need to see is leg down to this demand level that was created here, and then once this guy drops, we have to blow this guy all the way to 6,400 basis points for the S&P 500. As far as I'm concerned, this guy headed higher potentially if we actually remain above this 5,705 region. If for any reason we actually break below here, we have to actually come back and then analyze and re-strategize, which is the reason as why I urge you guys to click on that subscribe button, turn on the like, the bell icon rather, so that whenever I drop a gem like this, you guys will be among the very first few to see. All right. So for S&P 500, it's very simple. We need to see a pullback to 5,710 basis points level, which is around here. Actually, now mind you, this place is not a line. Let me just make this clear. It is a level. So should, in case you see the market pull back into these points here and then just reverse, it is a zone. It is a zone. It is not one line, please. I just use that line because I'm barely looking at this chart because it's quite straightforward. This is cleaner and neater than the rest of all these pairs that you see in here. Let's talk Nasdaq. I think Nasdaq also has similar setup as the S&P. Nasdaq. Let's see what Nasdaq has to offer. Okay, yeah. So Nasdaq also has a similar setup like the S&P here. Like I said, we need to say pullback into this 19,800 region, somewhere around here. That one leg down, and then we're very, very confident about blowing this guy through. All right, because we're actually broken out of this downtrend line here, which started to give us a low high, higher low, higher high, somewhere around. So one more leg down to this demand level here. Actually blow this guy through to 22,800 basis points as far as Nasdaq is concerned. So for BTC is headed to, guys, BTC is headed to, what's it called, $71,000 per coin. Oh, guys, you guys have to brace yourselves up, because if this guy should break above this 71,000 or $74,000 per coin region around here, which is actually $73,000 per coin here. Once you break above here, guys, this guy could easily blow all the way to 100K. So for BTC, before we actually decide on what we do with this guy here, the market has actually come here to create a demand level somewhere around here, and they bolted up with a bullish daily engulfing candles. So what we need to see is one leg down to the $62,000 per coin region here, which is almost like a neckline of a double bottom here. So it's like the bottom one, bottom two neckline break and retest. So we need to see that retest here, because this broke out with the demand level. We need to see the market pull back into this point, and then we'll actually go ahead and start buying this guy. All right. So first level target will be obviously 70K. Then subsequently we should blow through all the way to $74,000 per coin for BTC. As far as USDJPY is concerned, here we are actually dancing around a very, very crucial level, which happens to be a supply level here. So what we need to see is market and you can see the market has actually been slowing down around here, which is to show that the market is actually aware that it is coming into regions of very, very murky waters. So what we need to see here is the exact same thing we saw in a previous meltdown here. We need to see an engulfing candle pattern like this, a daily engulfing pattern, and then obviously we'll be here to use our counter channel, because market is actually starting to flag. So once we use our counter channel, we see that one engulfing 4-hour engulfing pattern here. I'll actually come in here to let you guys know when this guy is actually ready to rotate all the way back down to this bar right here. So talking about the US 30 is not really, doesn't really have any setups as far as I'm concerned at the moment. However, we highlighted this demand level from some, okay, all right, decent. So now for those of you guys who are actually counter trend traders, yeah, you can actually go ahead to take some selling trades on these guys. So for those of you guys who are actually counter trend traders, you can actually go ahead to take some selling trades on this guy here. My demand level target for US 30 is 40,200 basis points, because this lapses well with my Fibonacci level, which I'm actually looking to buy this guy from here. So if you're looking to sell this guy, you can actually go ahead, but please cut your risk size into at least half. All right. So because this guy could easily come back and then rotate higher. But what we need to see is this guy has to come down to this 40,200 basis point, and then we actually look for buying opportunities right from there. Since this was the recent demand level that the market created before making this high around here. All right. So now onto the yen pairs that are actually making us money at the moment. The first pair now is the EURUSD. So for EURUSD, EURUSD hasn't. I would say it has been my favorite pair because this guy has been slow, like the slowest. I actually expected this guy to bolt out of this point earlier than the rest of the yen pairs. However, it just became so slow. Now, as things stand here, we are actually playing around a trend line which has halted this guy from continuing higher. Now, if you remember a previous outlook, I spoke about this trend line from the weekly time frame, which is somewhere around here. Like so, if you look at it, we have this ascending trend line here. So this was where it was headed to, and then we now broke out of this trend line, and then this is where we are at now. So a demand level, and then this is a breakout retest of this trend line here. So anything is possible at this point. However, for me personally, I did not actually execute this pair. I'm actually waiting to see something very, very simple. Give me a break above here. Let me see a break above this point here. Once I see a break above here, then I'll be very, very confident to come here and then let you guys know what one. But as things stand here, this guy is at the crucial points. So give this guy another maybe day, 2 or 3 days, and see how this market fares around this level here. Once you can see that convincing break above this trend line here, then we are good to go. All right. Already the market has given us some form of inverse head and shoulders pattern, which is a reversal pattern for this whole impulsive drop here. So we could easily continue higher. Okay. Next pair on my list now would be the pound yen. So as far as the pound yen is concerned, I am actually in this trade. I executed this trade a long time ago, and I'm actually in profit as things stand. I think I had some of my entries somewhere down here inside of this whole fracas here. I executed the trade because one thing I've actually come to realize about the yen pairs is that they don't pull back the way you would want them to pull back. All right, they don't give you that that pullback, so you might as well just make do with what you have. All right, so find a consolidation around here and just execute. Okay, so that's just what I did with the pound yen. So far so good. It looks good. I see no reason as to why we should be worried about anything, provided that our stops are where they need to be, and we are actually going with the trend. Okay, so we had like a first touch, second touch, third touch was here, and then we had like a fake out, and then break into this bar right here, and then continuation. So my first level target for the yen, for pound yen, is 208. All right, so once we clear 208, we have space all the way to 214. All right, that's just that for the pound yen. So the next pair now on my list is, let's talk about USDJPY has also been bolting ahead of the rest of the pound yen, the rest of the yen pairs. And for those of you guys who actually missed this yen rally here, so we have actually gone ahead to break above supply level, which is somewhere around here. Okay, and then we're actually testing this outer part of this trend line. So what you should expect to see is maybe a potential pullback to these points here. Now I like to play with demand levels here, so we could easily maybe see a pullback to this demand level around here. Now in the event that doesn't happen, now in the event that doesn't happen here, what you should be looking out for is to scale down to the daily time frame and see how you can find a consolidation around this pair here. For me personally, I would not even advise you go into the USDJPY pair because this is actually late. Okay, this is late, and I'm not a big fan of late entries. However, should you actually consider this guy here, this is a demand level here. So wait for this market. Maybe I don't know if it's gonna pull back, because yen pairs are quite annoying. They can be annoying sometimes, right? So as far as USDJPY is concerned, your prime target remains 162, and then once you clear that barrier, we have space to 180. Now the next pair now on my list is let me talk to you guys about a pair that you guys can actually go ahead and execute. It's the AUDJPY. So for AUDJPY, since the Aussie dollar is still weak, okay, as things stand here, this is the only pair that is even early enough for you guys to go ahead and execute. Why? Because this guy has broken out of this downtrend here, and then he put in some form of inverse head pattern, and this is like a trend line break. So this is the only yen pair that is still early that you can actually go ahead and execute. All right. Now, mind you, as you execute, please put your stop below structure. always put your stops below structure. I had a comment one time of a guy saying that my stops were too large. I'm like, bro, as far as I make money from this market, that is all that matters to me. I'm not here to compete with who's using the tightest of the stop losses. Please put your stops below structure. All right, stops must come below structure, somewhere around here. Okay, put your stops below structure, because this market could easily melt back down, considering the fact that the Aussie is still weak. Right? So what we need to see execute here, and then stops must come either inside of here or outside of here. But please, whatever thing you do, put your stops below structure, please. So first level target for the Aussie yen is 1.110, and then subsequently we should actually continue higher, which I'll obviously let you guys know where. So to round this up now, let's talk about the DAX, the German 30. The German 30, on the other hand, also has a similar pullback to what I expect from Nasdaq, US 30, and then the S&P 500. It's very simple. I need to see this guy come back to test this demand level here. Okay, come back to this demand level here. Come and test it for me. Then I'll be in business. All right, because this is a very huge candidate that actually reacted from this point. So what I need to see is that dip back down to this 19,000 region here, and then we'll actually blow this guy through the roof, obviously. First level target will always be the recent high at 19,700, and then once you clear that high, we have space to 21,008. I think the last two pairs on my list now would be this yen pair, this yen index. So for yen index now, it's the reason as why I'm very, very confident about calling out the collapse of the yen, because I've done it before, guys. If it does, me go back and check my video at exactly last year, 2023, January, I think on the 9th, or it's still fresh in my mind, guys. I predicted the collapse of an economy. Like, you don't understand. This is exactly what I teach in my standard procedure program. Come and learn how you can actually go ahead to predict the collapse of the economy. Stop predicting pullbacks. Go ahead and predict collapse of the economies. You can do it. If I can do it myself, you too can do it. All right. So we've had this descent steep of a downtrend here, and it was just very, very simple. I saw this demand level, this supply level play here, and then I caught out this collapse somewhere around inside of here. Yeah, this was here. I caught out this collapse here. January the 9th, I caught this collapse here, and it just bolted all the way back down. And now we came on here again to create another supply level, which is further pointing to the downside. This is why I'm very confident in my trade calls, because I do my homework. Literally just grab the course. All right, so from swing high to swing low here, I could still see that the market has some room to the downside again. So this is that head and shoulders pattern, which is always the inverse on the rest of the pairs versus the yen. So the market is forming this at a supply level, which is first touch, second touch, then this is the third touch, and you guys know that third touch always does the trick. So what I did was go ahead and measure this guy from here to here. Okay, it's very, very simple, and then come and then extend it. So from here to here, so this is exactly where this market is headed to, in coming months, and even this could easily extend into Q1 as far as I'm concerned. The key thing is that we are in the right direction. We have actually executed our trades, and the market is working in our favor, and it's heading in a direction. So our only business here is to come on here every single week to let you guys know how to lock in your trades. Once this guy gets from here to here, what do? We lock in our trades, pocket some profits, and then maybe add some more positions, and then allow the market to just keep rolling in our favor. All right. So the last pair now on my list will be the dollar index. So this is just the reason as to why this whole mess is going on in the market as far as the US dollar pairs are concerned. So the dollar index now has a very, very funny price action attached to it in the sense that we actually broke out of this. Let me enter this guy properly. Okay, so we are actually testing the outer part of this trend line here, and as things stand here, we could easily rotate all the way back down from here, or we could even continue higher. However, where things stand here is a supply level here, because this has halted price in the past here as of May last 2 years, May last year again, and then here and then here. So we could potentially see this guy collapse all the way back down here again. However, judging from how bullish this guy has been here, I don't even see this thing happening like that. We could even maybe pick above here, then actually rotate all the way back down. But whatever the case is, yeah, I'm watching this guy closely to see what happens here. Should we break above here, then you know that the rest of the other trade calls here on the pound sterling, the euro, every other pair will be invalidated. But as things stand here, this is a very, very crucial point for the dollar here. This is even the third touch of the downward trend line, and this is the break and retest of the outermost part of this trend line here, which is the upward ascending trend line. So anything is possible at this point here. If I see an engulfing pattern break above here, then this whole play is invalidated, and then we are pretty much back to our visually as far as this guy is concerned. Okay, so okay, so that brings us to the end of our weekly forex forecast for this episode. Once again, my name is Desmond Samuel. Go ahead and leave a like and comment and subscribe to this channel, and then also go ahead and share this video to every single person that you think that they'll need this video. Okay. Once again, the name is Desmond Samuel. See you guys in the next weekly forex forecast, and have a profitable week ahead. Peace out.